Where is that WTI crude oil price heading next? Well, I'm going to take a look at the fundamentals, some sentiment and the technicals to try and get a better picture of where crude oil is going. So with that, let's get straight into that analysis. So the Baker Hughes rig count numbers, a great barometer for the energy oil sector as a whole. I love to use that US line at the top, and for the first time in a long time it's actually fallen from the prior count. -3, it's not a big number, but you know, first negative we've seen in a while. Change from last year, still positive, so mixed bag there, maybe a bit of weakness. As a heads up, we've got US API weekly crude oil stock data out later today. That's 9:30 UK time. Now, last week's were minus 3.799 million barrels, which was better than expected. So like I say, keep an eye on that figure coming out later today for any surprises. If there's no surprises, it really doesn't have that much of an effect, or it's more of a random effect on the price. But yeah, look out for surprises if you follow those type of numbers. So first of all, let's take a look at some sentiment measured through the charts. Now down the bottom here we've got seasonality, and you can see at the moment it's, you know, pretty sort of flattish, but it does peak here before, you know, say dropping off just that little bit. And you can see really for, you know, the time through to autumn it's pretty flat, starting to pick up again, so nothing too spectacular there at the moment in terms of seasonality. Going on to commitment of traders data, then we have the large commercials here which are rising, which we would then be looking for the price of oil to be falling because it has an inverse relationship, which it's doing, so that's a nice tick. And what is peculiar here is we can see that the large speculators, which should be sort of mirroring the price of oil, actually had a slight increase from that bottom down there. You can see that going up a little bit, but remember this is weekly data, so it does lag a little on the price, and we've got a daily chart up there. So what I'll be looking for come Friday is that to move back down into this zone to confirm that. But at the moment, if we just go from the large commercials and the price, then yeah, it's looking a bit weak, bearish, pulling back in price at the moment. Now if we head on to the weekly line chart, gone for a really longer term view here, all the way back to 2009, where you can see, well, 2008, sorry, where you can see the real height of the crude oil price and that lovely trend line, which was broken down in May of 21, and the price going up to more recent highs in the 120s. And you can actually see this sort of topping pattern being created, and there's a long way down to these support lines. You've got this first one here, which is around about $74, and then that longer term line that we saw, which sort of coincides with the 38.2% Fibonacci line, around about the mid $50. So there's some big downside there, but at the moment that sort of topping pattern is got a lot of support around that $100 mark. So let's see what it does. If it breaks there, first stop 61.8%, $81. If it can stay around there, not break, then it's got to get through those highs, and then next stop is around about $150. So that's a big upside move as well there. So some fundamentals need to be in play to shift it up there. But notice how the price is trading in between that two standard deviation, you know, regression bands there. When it does deviate outside, it pulls back in. At the moment, round about the mean of those bands. So again, another thing to watch out for longer term price action is the breakout, you know, on either side of those, and that mean reversion of the crude oil price. Now if we go onto the 4-line break chart, you want some reversals to get into the price. So it's still on a downward trajectory at the moment, and we're talking 95.5, 94 1/3 as potential downside entry points. So very similar to the previous report that we looked at. So a couple of numbers for you to think about there. And the daily Heikin Ashi, well, what's that telling us? Well, at the moment, down the bottom, our signals are both bearish. We got the shorter term and the longer term both in the bearish direction. The volatility is starting to pick up a little bit, not too much, about 40% per annum volume. Spiked just the other day, but actually trading around its sort of longer term average, maybe just a bit down actually from that. Lack of volume where it's coming into a quieter trading period, the summertime. So no real surprises there. And heading on to the price, our long-term probability power box, well, I'd actually say it's probably pretty neutral at the moment. So 50-50 in terms of direction from where we are here. Could go either way. And remember, we would marry that in with these red dashed lines, which are the institutional power zones that create good support and resistance areas, and also the trend, which is that shaded area, which is green or red. And at the moment, it's just gone back red into here. So at the moment, maybe with that red institutional band there favouring more downside with support around the sort of 80 numbers. But like I said in the previous chart, we got this very strong zone of the $100 to watch out for, to see whether it can hold around there. Now in the shorter term, using the Renko chart, $1 block size used, signals at the bottom, all bearish for the longer term trend, but stochastics starting to turn around as we can see that marry into that recent price move correction. The regression signal as well has been down but starting to pick up, so maybe a bit more favourable there. In terms of price, actually for the last few months, it's been pretty sideways between a decent range, you'd say, of what would we call it, 120s to 90. So you've got a good opportunity for some range bound trading there within those I say bands. But at the moment, price try to pull back down to the 94-95 mark, where we can see a lot of sort of support areas where the price has wanted to bounce back up again. So that's why I say I think it's key this. So we're at $95 to $100 if we want to see a break to the downside. And if we did, what sort of numbers are we looking at? Well, we got 86, 81 and sort of 75 as possible potential downside targets. If this is support and it moves on up, well, we've got to think about the highs first. Well, actually, we've got a lot of noise around here, which is the early $100. Through that, then, like I say, to those highs in around 120, and then 127 and 141, 148. But those 140, 150 areas, I think it's going to need some fundamental shift to give it that momentum to push it on up there. So if you're wondering where you can trade the outright price of WTI, CFD spread bets in Trade Nation here, just for an example, you can see US light crude futures, the August contract, nice decent spread to it, not too expensive there, and leverage 10 to 1, which isn't too bad. But what makes it more attractive is that small trade size, 0.1, so that means it's more affordable for retail traders. So just an example of where you can get exposure to WTI crude oil, and you can actually see above that Brent crude with 2 futures contract months as well, if you fancy a play. So a score then for WTI crude oil, I'm sticking with neutral overall only because I want to see what happens around this $95 or $100 support area at the moment. And really, I say both the charts, Renko and Heikin Ashi, pretty neutral. Probability power score, really a 50-50 play. Other variables, a bit mixed, maybe a bit weak, bearish at the moment. But like I say, neutral overall for me, and also that's reflected in the targets. If we take a look there, both nicely poised actually for both up and down side. Maybe a bit more leg room in the upside, where we can see 5 to 1 and 7 to 1, really because of tight stops and good potential target areas. And it's sort of similar for the downside actually, 3.25 and 4.5 to 1. So like I say, nicely poised for a move in either direction at the moment. But like I said, the key to me is that 195 area and what it does around there next. So oil at the moment, WTI crude oil, neutral overall. So WTI crude oil possibly setting itself up for a decent move in either direction. If you trade crude oil, WTI crude oil options, then a straddle trade might be a nice one to play with the volatility picking up also there. If you can't, then like I say, use those technicals to time your way into the trade and watch out for that sort of $9,500 area. And if there are any other fundamentals that are going to push that price in either direction, let me know in the comments below where you think it's headed next. And if you want to talk in more detail about oil, or for that matter any market, any commodity, forex, crypto, whatever you want, we've got a free traders club waiting for you on Discord. I'll put the link in the description below if you want to join and, like I say, take that discussion further. Well, if you've liked today's video, please give us the thumbs up. Don't forget to subscribe and hit that bell button. And all that's left for me to say is thanks for watching, good luck with the trading, and I'll see you in the next video.